Tatsuo, we've seen 10 strong years for private equity. What are the prospects for deal flows at this point in time, and is confidence still very high?
I think so. I think a lot of companies are in need of finding solution, raising capital, and then sometimes by selling businesses, they can just reinvest the money into some growing areas. For example, we invest in lots of pharmaceutical businesses, and some of the large pharmaceutical companies are trying to cash out of old kind of legacy products. We buy them out and then kind of create different platforms to pursue a separate path of growth. So there are different ways to play the different markets, but certainly a lot of consumer things, for example, in Japan, we go after a variety of services. And once again, a lot of inefficiencies are built up, and the current shareholders are not necessarily able to or in a position to pursue efficiency gains. So we come in and we just do the kind of typical PE play.
Fair to say that Asia Pac is becoming the destination for private equity because we're seeing an inflow, especially to markets like China, which secured about $100 billion of overall deals last year. Do you see that trend building momentum?
I think so. For one thing, when you talk about Asia, there's a growing Asia like China and the rest of Southeast Asia. And there's also mature Asia, Japan, Korea, typically the case. And there's a different theme. And I think investors are looking for different types of risk-return profiles. And where I'm active, Japan and Korea, there's a certain theme. We tend to invest in companies with a good operating history. So we use capital to secure control, improve businesses. Whereas in growing markets, the use of capital is a little bit different. And so just a different risk-return profiles.
But when you take a look at the valuations, especially for Chinese companies, they seem to be exorbitant. Why aren't investors demanding more from such companies with no track record? What's your take on that, and what are the risks involved in that?
Optimism, I suppose. And then once again, some investors would rather see a high-growing investment opportunities, and others would rather see more stable operating improvement combined with the use of leverage. So it's different sort of ways to pursue returns over a long period of time. And the preference matter, I think.
Is there a sense of overvaluation? If you take a look at Lyft, for instance, which listed recently, it went from $82, $84 when it debuted to now at $70.
Yeah, I think there's an inevitable hype builds up, but if you kind of look at over a long period of time, the market kind of corrects itself. So as an investor, we just have to be careful not to overpay in the front end, and also be well diversified in the end. And I guess the same principle applies everywhere.
You talked about the Korean market and the Japanese market. If you take a look at Japan, for instance, it's seen the deals on the decline, in fact. In fact, it dropped 85% last year. What are the prospects going forward? How optimistic are you it will reverse?
Well, I'm a little biased, naturally, but we're very encouraged to see the positive developments, particularly after the earthquake, which we experienced in 2011, and things slowed down. But then the current administration came in and supported the market with a variety of measures. Now the confidence is back in place. So a lot of businesses are trading. And the role of private capital in Japan and Korea are still very small. So it's only in infancy compared with traditional established markets like the US or Europe. So we got a long way to go. But I do think that there's good needs for the corporates and the families to sell business on one hand, and the investors across the board, including Japanese and Korean institutions, are looking for ways to deploy capital in the private space. So I think this is very positive.
So given the small base, the low base, can we expect an accelerated growth pace going forward?
I think so. I mean, it's hard to put the number on, but...
if you had to put a number on it.
No, for example, we're looking to deploy capital, something amounting to $200-300 million worth of yen or Korean won every year, and that doesn't seem to be any difficulty. Let's say we need to find quality deals. However, there's ample market out there. And we're not the only players. We do see increasing number of players, local players, as well as international funds coming in to invest in Japan and in Korea. So I do think there might be some bumps up and down on the short term, but in the long term, I think we're just looking at the good growth trajectory.
How closely are you watching the U.S.-China trade war and trade negotiations? How would that impact sentiment?
It is a concern in that one thing that we have to be careful about, and nothing we can control about, is the exchange rate. The dollar-yen rate has been rather stable for the past 12 to 18 months or so. One could speculate that when that sort of pent-up energy is buried, it might be unleashed to sort of one end or the other spectrum. It's hard to see which way it's going to go. So in that regard, impact on the currency surely would have impact on our investments as well. But then again, at the moment, it doesn't seem like any sort of answer is imminent. Right? There will be lots of discussion going on. So we'll see. We'll remain, cautiously watching the situation, I guess.
Tatsuo, when you take a look at the PE space, is there a sense that there's too much funds chasing too few deals?
It always seems to be the case. Right? It always seems to be there's too much money chasing after few quality deals. If you look at Japan, though, for example, without looking at the number of GPs, the economy has always had lots of cash in the system. And it's never as if we were short of money, but it's more about how to assess the risk and put together the proper structure and make an investment. And then in that regard, a dozen or so GPs being active in what is about $5 trillion GDP market, it still is a drop in the bucket.
Have you been encouraged by the improvement in the Japanese economy and what some people deem as success of Abenomics?
Sure. Finally, we're starting to see consistent growth. It's a slim growth compared with some other markets, but still is consistent. And we're seeing good rise in wages. We're seeing increase in capital expenditures. And so it might be still the governmental assistance needed. Yet we're seeing lots of positive activities in the private sector. Our investees are doing relatively well, generating revenues across different sectors as well. So again, cautiously, but very optimistic.
Just one final question, Tatsuo. PE has a bad name because they're deemed as funds acquiring companies and causing the loss of jobs, for instance, right. Because eventually the goal is to make money. Your thoughts on that and how it all fits into the concept of sustainability and equality?
There are a couple of things. One is many investments were made have really led to growth in revenues and then increase in employment. A lot of consumers think part of the reason why we play in that space is that because we think we can make a positive impact. There are lots of subscale small businesses that cannot operate very efficiently whilst pursuing growth. Our involvement, bringing the right management, bringing the tools to help the business grow, has proven that the use of capital would lead to positivity in employment as well. The other thing is that a whole sort of emphasis on ESG is also somewhat shaping our behavior as well. It really started on the LP side, but we do look and watch the situation very carefully and see what we can do to further make the business better, not just the financials.